as Anthony said, I was a sell-side mining analyst for about 15 years, and I was just happened to be in the right place at the right time on a lithium stock called Pilbara Minerals. And I initiated coverage on that one at about a 200 mil market cap, 22 cents, and then over about 6 years watched it go to a $15 billion company, and kind of realised that I was in the wrong job. I should have probably gone and worked for Pilbara Minerals. And so when this opportunity came up to work for BlackRock, I had to have a really hard look at it because I genuinely believe this one has the potential to sort of follow suit. Disclaimer. So who is... Feel free to read that at your leisure, it's on our website. Who is BlackRock Mining? So we are a tier 1 scale graphite developer in Tanzania. And actually, why graphite is probably the more important question first. So as many of the people in the room may know, there is a lot of graphite in lithium-ion batteries. In fact, there is 7 to 10 times as much graphite in a lithium-ion battery as there is lithium. So for the same reasons that we've seen this major lithium boom, I think that graphite can potentially follow suit. So this is the reason I wanted to get involved in this company. So it's the second largest reserve globally. We're going to be a first quartile asset on the global cost curve. So that means the lowest 25% of the lowest costs in the 25 percentile globally. Now we are the only graphite developer backed by a major anode producer. So, and that is POSCO. They're the largest ex-China anode producer. They're backing us in 3 ways. They're a major shareholder at 12.8%. They're our life of mine offtake partner for the battery grade material, and they're also providing a $10 million US prepay to help us build the mine. Now we have all our government agreements and permits in place, and we're right at the pointy end of our debt financing process. So all the banks have been to site. We're expecting credit-approved term sheets by the end of March, so in the next couple of weeks, assuming we can herd the cats. And yeah, as you can see in that bottom bullet point there, the NPV upside is very substantial if we can execute. The NPV we have is about 2.1 billion Australian dollars versus our current market cap of about 150. We've got a really strong team, board and management team. Most of those directors on the board have had a lot of experience developing and financing mines, over 100 years of experience. In the management team, I'll probably draw your attention to Daniel Pantanet, the second guy on the list there. He's been working for EPC contractors for about 25 years building mines, and he was actually seconded to a company called Steuart to build the Balama graphite project in Africa. So he has graphite mine building experience in Africa, which is pretty key. So when you look at all the different battery chemistries in batteries, there's quite a bit of variation on the cathode side, so the top side there, the green. But on the anode side, where the graphite sits, they all have graphite in them. And as I mentioned, there's 7 to 10 times the volume of graphite in a lithium-ion battery. But there are actually 2 different types of graphite. There's synthetic graphite and natural graphite. And as you can see, the grey there is synthetic and the yellow is natural. Now, historically, synthetic was about 60% of the battery, but that is expected to change. And natural graphite has 3 major advantages over synthetic graphite. 1, it's a lot cheaper. 2, you can see that blue line coming in over time, that's silicon. To improve the performance of the anode, you need to intercalate more silicon into it, and you can't intercalate silicon with synthetic graphite. So if you want more silicon in there, you need more natural. And the third bullet point, the third reason is ESG. So to make synthetic graphite, it's incredibly energy intensive. You heat up the ingredients to something like 3,000 degrees for a couple of weeks. So the carbon footprint on the synthetic side of things is something like triple that of natural graphite. So what does all this mean? It means a lot more demand for natural graphite going forwards. Okay. And this supply-demand balance has been put together by Benchmark Mineral Intelligence, forecasting some pretty major supply deficits in graphite over the next couple of years. And you'll see a lot of these charts in other commodities, but have a look at the percentage of the market that's actually in deficit here. So in calendar 23, so this year, Benchmark are forecasting a 9% deficit in the market, so very substantial. So we think we're getting close to that point where the graphite price might start to really get moving. Here we go. So these are the metrics for the project, a very substantial NPV. That NPV is post-tax and after the government's 16% free carry is deducted. We actually build the mine in a series of 4 modules, 1 million tonne per annum modules at a time. The first module costs us 182 million. And then after that, we fund each of the other 3 modules from free cash flow. So you end up in a situation where, you know, to get this project off the ground costs us about 182 million, but you have a very substantial NPV if you can execute. As I mentioned, we sit on the lowest quartile of the cost curve for graphite. So this is the cost of all the mines globally that produce graphite. We have 4 key advantages. Very low strip, 0.8 to 1 life of mine. We can produce much higher purity graphite concentrates than peers, so that's worth more revenue. And we also have more large flake than most peers, which is again more revenue. The other big advantage we have is low cost power in Tanzania at 8 cents per kilowatt hour on the grid. If we were on diesel gensets, it'd be something like 35 cents per kilowatt hour. And importantly, the grid in Tanzania is actually 40% hydro, as at today. There's a new dam being built. It'll be up to 60 to 70% hydro by the time our project's up and running. So that basically means we're going to have some of the greenest graphite out there, if there is such a thing. Okay, did I skip? No, there we go. So as you can see, this is the modular approach here, 1 module at a time. The first module costs quite a lot more than the subsequent modules because there's a lot of infrastructure and setup costs. You can see that second module is $107 million US dollars. As I mentioned, we're in the debt financing process now. We're targeting about 110 US of debt. The construction period's 20 months. So assuming we can get our finance in place and pull the trigger, start construction in the second quarter of this year, then we should be up and running by the end of calendar 24. Okay, and this is the list of near-term news flow. A lot of this stuff hopefully will come out in the next couple of weeks. So we've already got those term sheets with POSCO for our offtake. We're expecting the full form agreements to be signed in the next couple of weeks. POSCO may also take up its right to take a board seat in the company, so POSCO's, as I mentioned, it's a $20 billion Korean conglomerate. So it has a very large balance sheet. So it'd be a really strong market signal if these guys step up, and we think they will. The other thing we're doing, we've had a lot of interest in potentially selling a sale of a stake at the project level. So our market cap, as I mentioned, is 150 million, but the NPV is 2.1 billion. So if we sold, say we sold a stake at 20% of the project for $100 million, that's an implied valuation of 500, which would be the same as raising, we're trading at 15 cents, that'd be like raising money at 50 cents. Now, even if we sold 30% for 100 million, that's an implied valuation of 300 or double our current market cap. So that'd be like raising money at 30 cents instead. So that process is going well. We have a number of very large entities in our data room, and we're hopeful that we can pull off that transaction because it'll be a much better value per share outcome than doing straight equity. Look, that's probably the presentation in a nutshell. This is the CEO is obviously a mining engineer, loves his Venn diagrams. So I'll probably leave it there for questions.